Be our fourth record year in a row in terms of production, and we expect costs to decline, and with these higher gold prices to generate significant earnings and cash flow.
Hello, welcome to Assay TV. It's 10 p.m. on a Tuesday night in Hong Kong. Meanwhile, it's 10 a.m. across the world in Toronto, from where I'm joined by Richard Young, who is the President, CEO and Director of Teranga Gold Corporation. Richard, great to see you here today. Great time to be a gold producer with gold up in the 1900s.
Absolutely. Great time to be a gold producer and have increased production as gold prices move up, which is what we've got today. So we're sitting in a very good position.
You've just released your Q2 production results. Tell us a little bit about that, some of the highlights of that.
We produced roughly about 90,000 ounces for the quarter. We produced 90,000 ounces in the first quarter, a little over. So record first half of the year. And those first half results benefited from our second mine, which we completed last year and entered commercial production on November 1st. And that mine is currently outperforming the original feasibility study, so it contributed to the strong results. And we expect the second half to be even stronger as we integrate Massawa into our Sabodala property.
How's your guidance looking for 2020? You hitting target?
Absolutely. We have not modified our guidance from the beginning of the year and are on track for a record year. It would be our fourth record year in a row in terms of production. And we expect costs to decline, and with these higher gold prices to generate significant earnings and cash flow.
What is your all-in sustaining costs?
We're guiding $950 to $1,075 and would expect to come in at the lower end of that guidance.
And your upgraded guidance, how many ounces are you planning to produce?
375 to 400,000 ounces this year, and we would expect next year to produce probably over 500,000 ounces as we get a full year of benefit of the integrated Naswa into Sabodala.
Fantastic. And you also reasonably recently produced your PFS for the Sabodala-Massawa complex. Tell us a little bit about that and some of the highlights of that.
Well, with the integrated Sabodala-Massawa project, what Massawa is it's the highest grade open pit mine development project in Africa, and it sits just adjacent to our infrastructure. So based on putting those two together, we would expect production from the complex to rise from less than 250,000 ounces at all-in sustaining costs of roughly $900 an ounce to 400,000 ounces per year, and all-in sustaining costs dropping well below $700 an ounce. So not only are we increasing production, but we're reducing costs. So with that higher volume, the property is going to generate some pretty material free cash flows of likely over $1 billion at $1,600 gold over the next 5 years.
You also have a mine, obviously your secondary mine, Wahgnion. You have an updated mine plan for that, I believe. Do you want to tell us a little bit about that?
That's correct, Leo. So the project came into production, commercial production, November 1st of last year. The mill's been operating at about 25 to 30% above design capacity. So with our second quarter results, we came out with an updated life of mine plan. It shrunk the reserves from 13 years to 10 years. We expect to average roughly about 150,000 ounces of gold per year. And we should generate over the next 5 years between $80 and $90 million per year in free cash flow. And again, that's at $1,600 gold, not the current gold prices. So at these prices, the numbers are materially higher.
Absolutely.
But it's been a solid operation, and we've just recommenced our drill program again as we look to move towards a 15-year mine life, which is what we target for all of our operations. And that program started, and we're getting very good results. And we would expect over the next couple of years that we could take that mine life back towards that 15-year goal.
And obviously exploration, a key part of your business as you look to replenish your reserves and resources. You have a project, Golden Hill, is that right? And a FEMA. Tell us a little bit about what you're looking for there.
Absolutely. So Golden Hill came with Wahgnion through an acquisition we did in 2016 of Griffin Minerals, an Australian company, which we bought for $50 million US. We've now built Wahgnion. It's performing well. And we made a grassroots discovery at Golden Hill. We will be, by the end of this quarter, we'll have an updated technical report for Golden Hill as part of a mine license application later in the year. We do believe that has the makings to be a mine. We're very excited. It's open pit, high grade, reasonable strip ratio, and it's on the Hyundai Belt adjacent to Endeavour's Hyundai mine. So it's got a great location, and that project is moving forward, and we're making some upgrades to our accommodations as we move from an early stage exploration project into what will be a large drill program and a feasibility study. And that work's going to be completed by the end of this month, and then we're going to restart the drill program pretty aggressively. So we're really thrilled with that. And then FEMA is a joint venture that we've got in Côte d'Ivoire. And Côte d'Ivoire is probably the best jurisdiction to explore for gold. It's been underexplored. And you've got the majority of this West African greenstone belt located within its boundaries. And so we've been trenching, and we started early stage drilling, and we should have an announcement out shortly on what we think will be a new discovery. And we do think that ultimately that has the potential to be a mine as well. So, you know, we're a company with a growing production profile with the acquisitions and the developments that we've made over the last several years that will take us to 500,000 ounces of annual production at among the lowest costs in the industry. But even beyond that, we will likely have 2 development projects that could take us increased production materially in the upcoming years. So we're quite excited about the future.
Absolutely. And has the pandemic slowed you down at all?
Not really. We have had to reduce material movement for safety reasons, but it has not impacted our operations. And we're working our way through it.
Absolutely. Well, it sounds like you've got a lot on your plate at the moment with the, you know, upgrading the production and then obviously all these exploration projects you're looking at as well. Looking forward into 2021 as we start to maybe get back to doing some face-to-face meetings around the world. What do you expect to be sort of some of the highlights that you'll be telling investors about then?
Well, as we look into next year, we would be 500,000 ounces producer with among the lowest costs, and that will allow us to pay down our debt pretty rapidly. We entered the year with roughly post-Massawa transaction of $400 million in debt, and we're going to make significant strides at these gold prices to pay that debt down. So I think that's going to be a major theme, how the balance sheet improves through the course of next year. And then we will have exploration updates for both of our operating mines, and they're going very well. I think that'll be positive. And then it'll really be on which project moves forward first, Golden Hill or FEMA being the next one up. But we will be moving forward on both of those projects. And I think as we move into next year, with updated resources on Golden Hill, and probably initial resource on a FEMA, the market will begin to see what our pathway looks like towards materially higher gold production than what we currently have today.
Fantastic. Well, we look forward to hearing your progress reports as things develop. But thank you very much for joining us today for Assay TV.
Leo, always a pleasure. Thanks. Look forward to seeing you in person.
Thanks.